Welcome to Profit Insights, your go-to podcast for the latest in financial and economic developments. I'm Dusty, your host. Today, we're diving deep into some pivotal stories shaping our economic landscape. Grab your coffee, settle in, and let's get started. Kicking things off, it seems the U.S. economy has hit a bit of a speed bump, contracting by an annualized 0.3% in the first quarter of 2025. It's the first dip we've seen since 2022. The culprit, a surge in imports as businesses rush to stockpile ahead of looming tariffs. This rush pushed the trade deficit to record highs. However, all is not doom and gloom. Consumer spending and business investments in tech equipment are still going strong, showing resilience and optimism amidst the uncertainty. Still, many economists are waving caution flags, pointing out that ongoing trade policies could potentially push us towards a recession. We'll keep a close watch on this one. The Federal Reserve, playing it cautious, decided to hold steady on interest rates, keeping them in the 4.25% to 4.5% range. Fed Chair Jerome Powell highlighted the tricky blend of economic uncertainties and inflationary pressures being stoked by these tariffs. Although inflation is inching closer to that sweet spot of 2%, tariffs are muddying the waters. The Fed also adjusted its growth forecast for the year down to 1.7% from an earlier projection of 2.1%. It's clear they're treading carefully as they look to steer the economy through these choppy waters. In brighter news, global equity markets had something to cheer about. Recent messages from Washington have sparked hopes of renewed U.S.-China trade talks, boosting stock markets worldwide. Hong Kong's Hang Seng and Europe's Stock 600, among others, rallied on optimism. Even Asian currencies found strength against the dollar. It's fascinating to see how a shift in diplomatic tone can ripple through financial markets, offering some much-needed positivity amid trade tensions. Switching gears to the oil market, prices have taken a noticeable dip. Brent crude has fallen from $80 in January down to $58. This slide hints at a looming global economic slowdown, exacerbated by those very same trade tensions and increased output from OPEC. A drop in U.S. shale production is also at play, as declining prices make extraction less profitable. It's a classic case of supply and demand dynamics unfolding right before our eyes. Speaking of dynamics, let's talk tech, specifically Microsoft. The tech giant reported a 20% surge in its cloud division revenue, driven by the ever-growing demand for artificial intelligence services. This strong performance lifted Microsoft shares by 6% in after-hours trading. It's a testament to how pivotal tech and innovation remain in today's economic narrative, leading the charge even when other sectors falter. Finally, an intriguing development on the geopolitical front. The U.S. and Ukraine have inked a minerals deal that promises to bolster supply chains for critical resources while setting up a reconstruction fund for Ukraine. It's a strategic move, enhancing economic ties and ensuring resource security in uncertain times. Before we wrap up, let's touch on some quick investment tips. With global markets rallying and tech stocks proving resilient, now might be a wise time to explore technology-focused ETFs or mutual funds. And as always, keep an eye on global developments. Trade negotiations can create volatility, but they also open up opportunities for those who stay informed and nimble. That's it for today's episode of Profit Insights. As always, thank you for tuning in and sharing these insights with us. Remember, when the dust settles, only the truth remains. Until next time, stay informed and make those dollars work for you.